Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of financial updates with me, Shikhar Garg, your host. Now, there has been a lot of things happening around in the world market, and as we see, oil has steadied a bit. Gold was seen under pressure, but dollar seemed to have gained some bit of strength overall, looking at yesterday's market moves. While China's central bank, they vowed to provide support to the markets as much as possible. So, Pankaj, what do you think? What is going on? What should we be expecting out of today's market?
So, for a change, we will start with Indian market today. Let's start with some India news. 10-year GSEC yield saw maximum down move in last 18 months and closed 11 basis lower at 7.04. This clearly shows that there is a buying interest happening above 720-25 levels, and it has got retraced. This looks like there is a buying from a value investors, and I also believe let's start watching a FII investors interest in Indian bonds. There was also value buying in equities yesterday and sustained better than the peers. Even Nifty closed 1.3% lower at 16,950. Rupee had a gap up opening based on a dollar strength and the risk aversion across the globe. Broke the much awaited watched resistance at rupees 76.65, closed at 1 month high for the dollar at rupees 76.69. Now all this was happening and there was an attempt to break higher, but it was failed by the constant offers from the PSU bank, who were seen active at the many levels. And along with that, there was a positive news coming from LIC IPO, and there was a consistent fall in crude oil prices. Now, there's a report that LIC IPO will open on May 4th. The official announcement is likely today. And today, there's a RBI's USD 5 billion sell-by swap auction is also there. And it seems that all of these combined together will keep a dollar in offer today. Let's see how it moves. But my expectations that will be in 35-65 range. Possible that we might not see 60-65, but that's the range likely. The currency is still beset with negative global cues and only constant vigil from the central banker, who is meeting surplus demand of dollars from its reserves and it keeping the dollars from rising too far. The week also started with a deep risk of mood driven by many negatives like widespread lockdown in China, increased expectations of faster pace of rate hikes in US, and no end in sight for Russia-Ukraine war. Let me remind you, we have completed 2 months yesterday on Sunday. So basically, the war which people thought will never happen or it will be get over in 2 days or 2 weeks is still continuing. Markets across Asian region led by China were heavily sold off by following cues from the fall in US markets on Friday and more negative influence from the Chinese economy. It was carried into a European session where stocks hit 1 month low. Not surprisingly, at the end of the day, China announced another rate moves, slashing the triple R by as much as 1% and eased conditions for banks to finance corporates. They have also, I believe that they have also reduce the reserve requirement for buying for doing a dollar forwards. So that 1% reduction also helped the currency today morning. The US session too started negatively, but reverse course after much awaited Elon Musk bid accepted by Twitter board, and now Elon Musk would be taking Twitter at $44 billion in cash, and he has already announced that he will take the company private. Germany business confidence unexpectedly improved in April as the economy showed its resilience after the initial shock of Russian attack. Survey data published by the IFO Institute showed on Monday, the business climate index was also better. Even all these news, along with the Macron win in France, could not push euro higher. Actually, it fell by almost 0.5% yesterday. For once, we had the yen getting a bit down on the back of risk aversion in the global markets, further aided by the fall in US yields. GBP, Great British Pound, continued to struggle with an uncertain outlook on the economy and rates, while fall in commodity prices weighed down by strong USD and higher financing rates, pushed USD, CAD, and New Zealand dollar to wall. Chinese yuan, not surprisingly, hit a 15-month low of 660, got a value buying today morning. Just to get a sense on the way rates are moving globally, negative yields vanish from a world's corporate bond market as investors brace for a monetary tightening. All bond in global high-grade index now yield more than 0%. It's like an end of an era. Thank you. Have a great day.
Okay, and that was quite a lot of insights. So, guys, now these are all the updates that we bring to you with an objective that we give you some sort of, the sentiments that are going across the market, as well as what's the facts around the market to, manage your risk properly. And what we've also heard, and I'd like to highlight again that the FII interest in Indian yields for the past 2 years, it has been more or less muted. So let's see how it goes around with the yields going higher above 7% and we seeing some bit of an interest. Another pointer, the 2 months of war, something which no one expected. As humans, we've thought we are behind wars and world peace is the situation prevailing, but 2 months of war with Russia and Ukraine, the ideologies are changing, the spendings are changing. So I think we are in a bit of a trouble with these kind of updates. Let's see how we go ahead in the future. We take a goodbye for today. That's it. Thank you, guys.